UBA say that despite the tight liquidity, the treasury bills market is still recording improved demand with interest seen across the curve. Chuka Nwachukwu, the head of ALM and balance sheet management at UBA, joins me now for more on the market so far. Chuka, let's first get a run through on what the market has been like so far this week.
Thank you, Ken. Good afternoon. Market started with a bond auction on Monday. We saw 3 maturities on offer, 2029, 2031, and then 2034. 450 billion was on offer, and well over 900 billion was subscription. However, 626 billion was sold. So we saw slight decline in yield, about 25 to 45 basis points, drop. For example, the longer end, which is 2034, dropped by 45 basis points from 20.45. He closed at the previous auction to 20%. He closed at this current auction. And that's has actually driven activity in the fixed income market, especially on the bond side.
Yeah, but how do you see the bond auction settlement impacting the money market rates going forward for the rest of the week?
Yeah, that's where the major issue is liquidity. System liquidity opened in debit of 1.6 trillion. That's quite significant. Apart from the fact that yesterday opened at about well over 500 billion, this bond settlement, which is today, obviously increased that volume to what it is now. However, that hasn't really affected, the activity on the fixed income side. We still see some cherry picking on the bullish side, especially on the T-bill side, the 1 year especially. And it is because of the attractiveness in yield, for investors. Now, going into the rest of the week in terms of liquidity, we still expect the liquidity to be very tight. We saw rates yesterday close around 30.75, and this today it will significantly increase to about 33%.
All right, but are we still seeing a more improved demand for T-bills today, and how are investors positioning across the curve?
The major concern in the market today is just how to settle the bond auction. Today is the settlement date, and of course, being that the system is pretty tight, nobody can access CBN window today, especially if you have gone for bond auction. However, we still see some slight trading on the T-bill side, bullish sentiment, like I said earlier. This is as a result of the attractive yield, and then hopefully going into the rest of the week, we'll see more improved activity on the fixed income side. But for today, major concern is on how to settle the bond, how to sort out the bond settlement, in terms of liquidity.
Yeah, we also got one very important data point coming through this week, which is inflation at 33% levels. And let me get your thoughts on what we can expect down the line from the monetary authorities in terms of resolving this challenge. We understand that the higher interest rate environment is still quite tight for now. Do you think we can see further tightening down the line?
I think that what the CBN has done, we've seen over the course of the MPC meeting, we've seen about 600 basis point movement increase in MPR. I believe that what we've seen in the increase of inflation is still part of what is in the system. Don't forget that, for example, majority of this inflation figures has to do with the FX inflation, and don't forget where we are coming from about 1,700 levels. And so most of these items are still bought at that level. But subsequently, we will see decrease in inflation figures, hopefully within the next 1 or 2 months. And that is because by then, the activities, the monetary activities would have kicked in, and they will begin to reap the benefit of it. So for me, I think that the inflation figure now is temporarily, is elevated temporarily, and then going into the next 2 to 3 months, we will see decrease in inflation figures.
Yeah, but looking at the capital markets now, the debt capital markets, and how the central bank has been intervening in terms of its strategy there, I'd like you to speak to that. And Because now we're seeing FX reserves are down by about 2 billion to its lowest in about 6 years. Kindly speak to what we can expect, or just to get your take on what we can expect going forward.
In terms of, can you be specific? I didn't get that question.
The CBN's intervention strategy, especially in the debt capital market.
Yeah. Okay. For what the CBN has actually done, is more on the monetary side, and for FX issues as well as the other aspect of the economy, we have to marry it with the physical aspect. So as long as the physical aspect hasn't properly been addressed, which I know they're working on it anyway, but I mean, not as aggressive as that of monetary aspect. We still see, slight elevation in terms of, in terms of rates. Currently, FX is currently trading at 1,148 naira per dollar, which obviously is depreciation from where we are coming from, around 1,200. So we'll continue to see moderation. We'll continue to see improvement in some of these monetary policy activities. Yeah.
All right, thank you so much for your time. We'll definitely be keeping an eye on the markets there to find out how things in that space continue to evolve. Chuka Nwachukwu there is the head of ALM and balance sheet management at UBA.